Welcome to Thoughts on the Market. I'm Chetan Iyer, Chief Asia Economist at Morgan Stanley. Along with my colleagues bringing you a variety of perspectives, today I'll be discussing our mid-year outlook for Asia's economy. It's Thursday, June 15 at 9 a.m. in Hong Kong. Asia's recovery is for real. We believe its growth outperformance has just started. We expect a full-fledged recovery to build up over the next 2 quarters across 2 dimensions. First, we think more economies in the region will join the recovery path. Second, the recovery will broaden from services consumption to goods consumption, and in the next 6 months to capital investments or CapEx. We see Asia's growth accelerating to 5.1% by fourth quarter of this year. There are 3 main reasons why we expect this growth outperformance for Asia. First, Asia did not experience the interest rate shock that the US and Europe did. Asian central banks did not have to take rates to restrictive territory because inflation in Asia has not been as intense. Plus, Asia's inflation has already declined, and we expect 80% of region's inflation will get back into central bank's comfort zone in the next 2 to 3 months. The second reason is China. While China's consumption recovery is largely on track, we have seen downside in the last 2 months in investment spending and the manufacturing sector. We believe policy easing is imminent as policymakers are keen on preventing a deterioration in labor market conditions and on minimizing social stability risks. Easing should help stabilize investment spending and broaden out the recovery in back half of 2023. Beyond China, India, Indonesia, and Japan will also contribute significantly to region's growth recovery. India is benefiting from cyclical and structural factors. Cyclically, we think healthy corporate and banking system balance sheets mean India can have an independent business cycle driven by domestic demand, and we are seeing that appetite for expansion translating into stronger CapEx and loan growth. As for Japan, it is in a sweet spot, having decisively left the deflation environment behind but not facing runaway inflation. Accommodative real interest rates are helping catalyze private CapEx growth, which has already risen to a 7-year high. And another momentous shift, Japan's nominal GDP growth is now rising at a healthy pace after a long period of flatlining. Finally, we believe Indonesia will be able to sustain a 5% pace of growth. Indonesia runs the most prudent macro policy mix amongst emerging markets. In particular, the fiscal deficit has been maintained below 3% since the adoption of the fiscal rule and has only exceeded that in 2020 during the worst of the pandemic. This has resulted in a consistent improvement in macro stability indicators and led to a structural decline in the cost of capital, supporting private domestic demand. The risks to our next 12-month Asia outlook are hard landing in the US, which Morgan Stanley's US economists think it's unlikely, and a deeper slowdown in China. But we believe China's recovery will only broaden out in the second half of 2023, and given this, we feel confident about our outlook for Asia's outperformance in 2023 vis-a-vis rest of the world. Thanks for listening. If you enjoyed the show, please leave us a review on Apple Podcasts and share thoughts on the market with a friend or a colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.